If you're watching this video right now, then you are probably wondering what is the best time for you to trade, either as a scalper, day trader, or swing trader. Well, the truth is that there's no such thing as a best time frame to trade. Every single time out there is useful, regardless of which strategy you take or how you are going to execute your trade. So in today's video, I'm going to share with you some of the best time frames that you can use. If you are a scalper, I have the time frames for you, whether as a day trader or a swing trader. These time frames I'm going to share with you will help you see the market in the right way so that you know how you can do your analytics on the right time frame and take the right trade. So with that already said, hello guys, if this is your first time on the channel, welcome to my channel, welcome to Forex, Crypto and Forex. On this channel, I mainly focus on sharing tips on how you and I can make money as trading the crypto and forex industry. So if you need more great videos like this, then smash that subscribe button, like this video, and tell me what you feel down in the comment section, because every single week I come up with 2 to 3 videos on everything about trading. I focus more on sharing my trading knowledge with you, and that is all. So to add up to it, you can also join my Telegram channel. The link will be down in the description, where you can join the group to ask me any question at all you think about trading or any problem you're having as a crypto or forex trader, and I'm going to help you sort that out. So that's already said, let's get straight on my laptop. Let me show you a practical example on the preferred time frame you should use regardless of your strategy. Guys, when it comes to trading, there is no such thing as a best time frame, as I said in the intro. But then there are some time frames that are good for every kind of trading, and you can see them on your screen right now as I've written them. But before we actually get started, first of all, how does time actually affect trade? So here's the thing: the time frame you use determines how you see the market, and the way you need to see the market determines the kind of trader you are. So if you are a scalper, which is the scalpers, you need to see the market on the shortest time frame, because you are not willing to hold any trade for more than minutes or not more than 1 hour. Highest a scalper can hold a trade is an hour. And on the other hand, as a day trader, you can hold a trade for up to 20 hours, which is within a single day. You can hold a trade for as long as that. And on the other hand, for a swing trader, you hold trade for a longer period. So now, those times that you hold your trade actually determines how you want to see the market, because for a day trader, it's very dangerous for you to enter any market using 15 minutes or 5 minutes. Like doing your analysis in 15 minutes and 5 minutes is very dangerous for a day trader, because you always find yourself losing. On the other hand, it's also very dangerous for a swing trader to use the hourly time frame to make his analytics, because the market, what he is looking for a long-term movement and not a short-term movement. So all of this boils down to the different minutes on how you see the time frame. So now here's a market on a GJ, which is known as a Great Britain pounds and Japanese yen. And if you take a look at this market right now, we are on the 4-hour chart. So I'm just going to go over to the 15-minute chart. Let's see how this market actually appears for the scalper, because we are going to start with the scalper. Let's see how the scalper sees the market and how the day trader is also going to see the market, to let you know the importance of time whilst trading. So now let's go over to 15 minutes and see this market. Let me just reset it. So if you look at this market on the 15 minutes, as a scalper, what do you see? As a scalper in this market, you are seeing what? A consistent uptrend starting from here like this. You can see your uptrend right now, and you can see your swing highs. You can see your swing highs. 1. So let me just delete this my former drawings of the markets. Those were my trading zone where I actually placed a trade. Let me get this also out of the markets. So let me get this out. So as a day trade, as a scalper, you are seeing all of these swing highs, and cool. So as a scalper, when you see all of this, what do you look for? You are waiting for a retest, because you want to take the smallest movement in the market and trade all of that. However, if you go to a different time frame for maybe a day trader or a swing trader, he's not going to see all of these things you are seeing in the market. So the kind of trader you are determines the time frame you use. So for you as a swing scalper, you've seen the market in this order. Then you go to the 5 minute to see the next smaller movement. So when you come over to the 5 minutes, you see another swing high here. Because as a scalper, what you are simply looking for is simply a movement, a tiny movement to make profit. Unlike day traders who can hope up to 100 plus, up to even 200 pips. As a day trader, there are days whereby you can hit up to 200 pips from a single market movement. So you see all of this. So all of this is why the time frame you use is very important. So as a scalper, it will be wrong for you to scalp with the 1 hour time frame, because things that happen on the 1 hour time frame, every single candle means 1 hour. So you need to wait for 1 hour for a single candle to be fully formed. On the 15-minute time frame, you need to wait for just 15 minutes for a candle to be fully formed, which is good for a scalper. And on the 5 minutes, every candle they represent 5 minutes. So if you take a look at it, the time frame you use actually plays a key important role on how you see the market. So now that is it for the scalper. You can see why it's best for you to use the 15-minute time frame as a scalper, because you see the market as an uptrend, meaning you are only going to trade this uptrend or any sort of reversals you spot. So now on the other hand, let's take a look at how a day trader will also see this market. So for that, let's hit on the 4-hour time frame, and then let me reset the chart. So on the 4 hours time frame, let's take a look at the market. What do you see? What's the key difference you see on the 4-hour time frame? You can see all the multiple swing highs the scalper saw on the 15 minutes and 5 minute time frame are just minor single candle movements. Just take a look at the big line we drew some minutes ago. You can see it's just a single few movements on the 4-hour time frame, and this is why timing is really important in trading. The time frame actually plays a key important role. So now let me get rid of all of this. Let me just get this off. So now you as a day trader, you are not willing to place any sort of trade in this market. Depending on the strategy you trade as a day trader, you are not willing to place any trade here until this market actually comes back here for a retest, because as a day trader you are aiming for a high profit, unlike the scalper who wants to take every single movement. So in this sort of order, what do you see here? Your time frame actually plays an important role. So take a look at this. Over here now, every candle represents 4 hours, since we are on the 4-hour time frame, because as a day trader your aim is to go for a longer market movement and not any short move. So once the scalper sees a very serious uptrend within this single area, a day trader is seeing the market newly broke out of what? Let me get my drawing too. So a day trader is seeing that the market newly broke out of this minor resistance area or supply area. So a day trader is seeing that the market newly broke out, so he's waiting for the market to come back for a retest before he places an order. So you see the difference now. So you can see that the scalper has seen so many movements in the market and probably executed so many trades in that minor uptrend, which is these few 4, 5, 6 candles you see here on the 4-hour. Meanwhile, on the other hand, the day trader just saw a breakout from a ranging market and is waiting for a retest before placing his order. So you see why time frame is really important. So that's why I said for a day trader, go for higher time frame, because the higher time frame gives you the opportunity for you to take higher moves. So now let's go over to the 1 hour and see how you are going to see this market again. You see, even on the 1 hour chart, the day trader is still seeing that the market newly broke out of this area, so there's no serious uptrend for the day trader yet. So the day trader for this market is probably waiting for the market to come back down like this before he will place his order, either long or short, depending on the strategy he trades, because your strategy determines how you finally sees the rest part of the market and that. So when you are trading as a scalper, it's best for you to use the 15 minutes and 5 minute time frame, because they give you every single minor movement in the market. On the other hand, if you are a day trader, the 4 hours and the 1 hour is the best ideal time frame for you to actually trade. So now let's also, this same market, let's look at how a swing trader will also see this market. So now let me go over to a daily time frame. So now let me reset the chart. So on a daily time frame, what do you see here? So on a daily time frame, once the scalper and the day trader is simply placing a buy order, a swing trader is waiting for this market to patiently get to this resistance area, this overall resistance area, so that he can probably short it or wait for it to break out before he places his order. Because for the day trader, he is seeing this area here as a support level. You see, this is his support level. So for a day trader, this market is just within a minor area and he's not ready to place any trade here. I mean, a swing trader is not ready to place any trade here. So you see that the time frames actually determines how you see the market. Look at how the 15 minutes saw the market. The same market, the 1 hour, the 15-minute trader, which is the scalper, saw the market as a serious uptrend. Meanwhile, the day trader saw the market that the market newly broke out of a ranging market and is waiting for a retest before placing his order. On the other hand, the swing trader is seeing that the market is still ranging within this circle, so he's not ready to place a trade yet until the market either come back here for a retest, which is this line below here, the yellow line, for a retest before he will place a long order, or he wait for the market to come and retest this resistance area, then he placed a sell order. So you see how everyone sees the market differently. So now for a swing trader, he might even go up to probably, so here I have the days. So now let me open the days. He's even willing to go up to 1 month's time frame. So now let me reset the chart. So you can see on the 1 month here, he's not seeing any major movements in the market, meaning a swing trader who is open for a monthly movement is not ready to place any trade, because each of these candles you see here take 1 month to form. So if there's anything that will happen in this market right now, it will have to take 1 month period before a swing trader is actually going to see any profitable order to trade. So when it comes to trading, as I said, your time frame determines how you see the market, and I believe you've personally experienced that here, how the time frame actually shows different parts of the market. So as I said, when it comes to trading, let me go back to the 4 hours time frame. When it comes to trading, don't be in a hurry to pick any random time frame that anyone recommend. First of all, try to know which kind of trader that person is. And personally, me, I do scalp trading, I do day trading, and at times I do swing some trade. So I'm into all of these three trades. That's why I'm sharing with you all the time frames I use depending on the type of trade I want to take. So if I want to take the 15 minute, if I want to scalp, I use 15 minutes for my highest time frame analytics and use 5 minutes to execute my trade. And then if I want to take a daily trade, meaning a trade that I will head with for the next 20 hours, maximum 20 hours, then I can use the 4 hours as my highest time frame, use the 1 hour and 15 minutes for my extra confirmation before entering the market, to make sure that the market is on same direction as all of them. Meanwhile, if I want to hold trade for days, weeks or more, I go for the daily time frame up to the monthly time frame, because this one gives me the overview of the market on the higher side, because what happens in the last month is likely to happen this month. So if I'm to swing a trade, I should be looking at the trend from the previous month and not the trend that I'm seeing on the hourly time frame, because the hourly time frame is too short for a swing trader to make analytics, because those are things that are just happening. You will need multiple of those, maybe 20, 30 of those, to actually create what a swing trader will see in this overall monthly time frame. So I hope you find this video helpful and you see all of this time frame. So however, I'm not just forcing you to use this time frame to start trading right now. One thing I advise you to do is I go and back test with all of this time frame and see which one actually fits your strategy the best. So in case you don't know how to back test, you can actually watch a video on your screen right now. So that video on your screen will show you every single thing you need to learn about back testing, and I'll be linking to that in the video description. So the best thing, check the video description. I'll be linking to a video on how you can back test a trading strategy and the free software you can use for back testing. And on the other hand, also you can go learn my full course. So I just dropped a full course on supply and demand, which is available here on YouTube. So it's not a premium course, it's something that I gave out for free. You can also learn it. I'll be tagging it down in the video description. So with that already said, hope you find this video helpful. Have a nice day. Don't forget to smash that subscribe button, like this video, and tell me what you feel down in the comment section. So that already said, have a nice day. Bye.